Welcome to Yahoo Finance Live. I'm Josh Lipton. That is Okiko Fujita, and we're here to catch you up on everything you need to know at 3 p.m. Eastern. Let's start with these markets. We have a day in the green here. Follow through from the Fed. Market trading higher on optimism as the Fed, some investors thinking, may be done raising rates. Check out the Dow right now, up more than 500 points, 1.5%. Treasury yields, meanwhile, sliding on that news, and new data showing labor costs unexpectedly declined in the third quarter. That boosting confidence. Inflation, in fact, may be slowing.
And spending power, the Fed acknowledging the strength of the economy of late, much of that reflected in strong consumer spending. But JP Morgan Chase CEO Jamie Dimon says despite the strong consumer, excess savings are running out for middle income Americans. So how well off is the consumer? We're going to break that down for you.
And tech is on deck. Apple's fourth quarter earnings report out after the bell today. The results come amid a slowdown in the smartphone market, we know, and growing competition in China. The report comes days after Apple unveiled its newest MacBook. We're going to bring you the quarter's results and in-depth analysis. But right now, let's get you caught up on speed on all the market action right now. We've got green across the screen for the major averages. In positive territory here right now, as a lot of investors are thinking they heard from the Fed, they listened to that presser, some concluding the Fed could be done with interest rate hikes here. So you can see the Dow up 1.5%, tacking on more than 500 points. The S&P 500 up 1.8%. If you popped open the hood in S&P 500, you would see this is a broad-based rally. All 11 sectors are trading right now in positive territory. And of course, the tech-heavy Nasdaq up 1.7%. Meanwhile, as for Treasuries, yield for the benchmark 10-year is lower today. It's sitting right around, 4.667 as of right now. And further ahead, of course, Akiko, later in the week, we get the Friday jobs report. That'll be, of course, a big item for investors. But more immediately after the close, we get Apple reporting results.
That's right. Investors are certainly going to be focused on those fourth quarter earnings results coming out after the bell today. This is a stock, Josh, that is up more than 35% year to date. But there's not a lot of optimism, you could argue, going into these results. There's a few headwinds. We're talking about iPhone 15 sales, reports that is a bit lackluster, although we should point out it's only about a week of sales in the quarter that's being reported. There's also concern about, sales in China, roughly 10% of revenue. And then Apple, the company itself, has sort of indicated they're headed for another quarter of declines, which would be 4 consecutive quarters.
Yeah, no, it is a really interesting setup. It's a good point because you look at that stock, so you are up about 30% this year, but you're down nearly 10% since they last reported results in early August. And I was checking in with Gene Munster over at Deepwater Asset Management. You know Munster, longtime Apple analyst and still bullish. I asked him what explains that nearly 10% drop, and he would put two things. One, he said, listen, obviously there has been this broad pullback in tech, and that's pulling in Apple. He also knows, though, what you pointed out, which is you do have concerns specifically about China and how Apple's business is doing over there. A lot of different cross currents, including Huawei, right? They have a new smartphone. Some analysts a little bit concerned about what that means in terms of competitive risks. So I think that softness in demand is really key, according to Munster, in explaining why you've seen that slide. China is a key market, represents about 20% of the company's total sales.
Yeah, and there's two threads, I would argue, on China specifically. One is what you said. What is the state of the consumer right now? Are they willing to shell out those high prices that come with an iPhone 15, especially at the premium price point? There's also the competition about Huawei, and that verdict seems to be really split. Huawei came out with this new phone, seen as a big competitor to Apple. They were much further along in their own chip development, but you could argue it's still behind Apple when you think about where their technology is. So is this one of those things where it sort of impressed the market in terms of Huawei just because the expectation was so low, or are they really giving Apple a run for their money in their home market at a time when you could argue the Chinese government, the cross currents coming through are about sort of supporting the homegrown player?
That I think is such an interesting point, because you talk about Huawei, yes, it's the tech, but also to the extent that you have these growing geopolitical tensions between Washington and Beijing. Do you have more consumers there sort of rooting for the home team? I think that's a good point. We'll find out, by the way, that Greater China, in terms of the revenue, the bogey the street's at, they want to see $17.01 billion. That's the target. We'll see if Apple hits it. Moving on, stocks gaining today on optimism. The Fed may be done raising rates. Treasury yields sliding on the news, but JP Morgan Chase CEO Jamie Dimon doesn't necessarily agree with that call. Yahoo Finance executive editor Brian Sozzi spoke with Diamond last night.
I think they did the right thing to raise rates rapidly, and I think they're kind of right to pause here a little bit and see what happens. But I suspect that they may not be done. I think there's a chance that inflation is just a little stickier than people think.
For more market reaction, we turn now to Nancy Daoud, Ameriprise Financial Private Wealth Advisor. So, Nancy, let me get your take on this. I mean, you saw the Fed's statement yesterday. I'm sure you listened to Jerome Powell's presser. Some investors perhaps deciding today, hey, the rate hiking campaign is over. But meanwhile, we just heard from J.P. Morgan's Jamie Dimon. He's not so sure. What do you think?
Yeah, I don't disagree with him. I think that all the hype and the optimism is wonderful, and it's great that the market is up. They're even talking about this being a Santa Claus rally. I don't think so. We're a little bit early for all of that. And I do believe that we may see at least one more rate hike. But it will really all be very data dependent, just as Mr. Powell indicated.
Nancy, what would justify another rate hike as you see it? I mean, the argument sort of going into the decision yesterday was that the market, specifically the bond market, has been doing a lot of the heavy lifting for the Fed. So with rates where they are, even though we've seen a pullback today, why another hike?
Well, it all depends on the data. I mean, the jobs data will certainly be very important. The strength of the economy is beginning to show some signs of weakness, even in corporate earnings. But the jobs data report will be very important. It really has to do with what the data shows in the next few weeks, that whether we will have another rate hike or not this year in November. But I wouldn't bet on no more rate hikes. I think there may very well be another one for the year. And certainly no rate cuts anytime soon, which a lot of people have been talking about.
Nancy, let's turn to the equity market. I'm just interested, as we sit here now, we're in November. Do you think we are in for a year-end rally? Are you in that camp? I know others, Morgan Stanley's Mike Wilson isn't expecting that, says chances of fourth quarter rally have fallen considerably in his opinion. What do you think?
Well, I think we're probably going to see a boost. November, December those are the months where we see the year-end big hike in the stock market. And then I would expect that would happen. Although there's a lot of rumors that retailers are not indicating as such, I don't believe so. I still think that there's a lot of cash out there. And it really all depends on where you are in the food chain. If your income far exceeds your outflow, then the effects of the inflation haven't hurt you as badly. Whereas if you have even cash flow or negative cash flow in your household, the effects of inflation are definitely showing up at this point. But in general, I do believe that we will see a good boost in the market November, December.
So how are you advising clients right now in terms of how they should be putting that cash to use with the expectation that there could be more upside in the next few months?
Well, we've been on the forefront on this. So during September and October, when everybody was fearful and investor sentiment was going downhill, that was the opportunity. Those were the opportunity months. And then that's when we deployed new cash, but certainly with a little bit of caution because we're still not out of the woods with the fighting inflation. And then also the new wild card here is the war in Israel and how that will affect us. And that certainly has affected two things, energy prices and consumer staples. So those are sectors to look at and have been the two sectors that have been up significantly since October 7th when the war started. So there are always current events that affect some of our thinking, but if you were in the forefront in this and were entering the market in September, October, you're feeling pretty good right now, even though we're probably in for some more volatility, but it should have been a good move.
And in terms of sectors, Nancy, I see here you also like utilities. How come? What's the thesis there?
Well, we're still very defensive, so we look for value stocks, utilities, financials, and the healthcare sector have been very steady and in giving us the income that we need in order to offset the volatility. And then as far as opportunity, we always look for what has taken the biggest hit. So I see opportunity in small cap stocks because they're down significantly, have not performed as well as large cap, but with a great deal of caution and risk appetite check. And also bonds, fixed income got its name back. We actually have income in fixed income again. And so if indeed the Fed will stop raising rates and actually cut rates later in the year or next year, then you'd be very well positioned in the bond market if you start to begin to enter now.
So in terms of sectors going after those that have been underperforming, what about some of those higher growth names? We've been talking so much about tech and AI. Are you taking some money off the table in that area?
No, I think we're holding steady because although there's a lot of volatility, ultimately these companies will do well. And it's really like anything else. If the company has a good balance sheet, good cash supply, they will weather all of the storms that are coming up. However, if they're highly leveraged or in fact have loans coming due that they have to refinance at a much higher rate, then there will be some gyrations or consequences to that. So the key to all of this is selectivity. You've got to be selective about which companies you're getting into as opposed to just across the board in the tech sector.
Nancy Daoud, thank you so much for joining us today, Nancy, and for that insight.
Thank you.
Let's get to some tickers now. Shares of Palantir, they are popping here, up more than 20%. That's after third quarter results beat estimates. It's the company's fourth consecutive quarter of profitability here. So reporting here at Kiko, and investors clearly like what they heard. The stock is surging. 4 consecutive quarters of profitability. For the year, they're now looking for adjusted operating income between 607 and 611 million. That was also above estimates. CEO Alex Karp saying the company earned the most significant profit in its history. And the stock, listen, it's surging today. It's surged this year. It's up about 180% now so far in 2023.
Yeah, this is a company that's been around for 20 years, right? Pretty incredible to think. Yeah. Highest earnings in terms of where the company has been in 20 years. But now that you talk about the 4 consecutive quarters of profitability, that makes them eligible for inclusion within the S&P 500. So the company highlighting that as well. You could argue the other big reason why, yes, the results are strong, but getting a big pop is because of the artificial intelligence play, because it feels like in many ways investors have been looking for sort of what that revenue looks like for these individual companies that have seen so much pop on the back of the potential. The company highlighting their artificial intelligence platform, saying they're seeing huge growth on that front as well. Let's take a look at another stock that is popping today. Shares of Shopify soaring. Let's see if we can take a look at that. It was up more than 20% here on the back of a big beat on third quarter results and posting a strong full year forecast. You're taking a look at earnings per share at 24 cents compared to 14 cents. So that was a huge beat. But you could argue, Josh, that part of this was also about sort of the lower expectations that have been set for the company. The company has been going through a lot of cost-cutting measures. They had a layoff of 20% of their workforce. They also divested some of their logistics unit as well. So they're talking about the cost-cutting part of it, but also finding new levers here for revenue. You talk about something like the partnership with Amazon as well as their investment in Fair. Investors responding to that today.
I mean, this is another name. It's up about 70% now this year. It's a huge surge. Q3 revenue and profit beat estimates. Gross merchandise volume, by the way, also above the street's projections. And to your point, Kiko, some on the street, just reading through the commentary today, clearly like what they saw in terms of cost discipline. Earlier this year, remember they cut jobs over at Shopify. They sold the majority of their logistics unit to Flexport. Citi, though, saying the results show how the company is outperforming a wobbly macro. And again, they talk about share gains and significant discipline in their words. All right, moving on here. Our final ticker to check out. Let's get a look at Affirm. Also, nice move today on this new partnership with Amazon, up again about 20%. Affirm's buy now, pay later services will be available at checkout on Amazon Business. So the headline here, they're really expanding, it sounds like, their relationship at Kiko, right? So now Amazon says, okay, Affirm is going to be the first buy now, pay later company offering a checkout on the Amazon Business platform. Amazon saying in a statement here, the technology, ease of integration, and ability to support a broad range of transactions especially as the firm is already used, they say, by millions of Amazon customers today.
Yeah, so it has been available for customers. Now it's for Amazon businesses. We're talking about loans ranging from $100 to $20,000 at a time when a lot of these businesses have been struggling. When you think about the higher costs, sort of the higher price points that we're looking at right now. The service, by the way, now set to be available by Black Friday, at least according to Amazon.
Yeah, and what's interesting is, you talking about the BNPL space, the buy now, pay later space. I mean, yes, it's this deal, but the way it has sort of gained increasing traction and credibility, right? I mean, yes, it's Amazon, but Apple, PayPal, Visa, I think a lot of these companies know a lot of people, especially young people, they are using these apps and services.
Yeah, there was some concern, right? Especially when it saw huge gains during the pandemic, whether in fact things could kind of backfire because of the consumer sort of racking up a lot of debt on the back of it. But we've seen strength here coming through, especially on these partnerships with Amazon.
Yep.
Always seems to get a big pop on the back of those announcements. All right, we are just getting started here on Yahoo Finance Live. Coming up, Starbucks says people are willing to pay more for their lattes. What does this say about the state of the consumer? We're going to break it all down. And the SBF case heads to the jury. We've got the latest from a reporter who's been inside the court in that hearing for Sam Bankman-Fried. And Apple earnings on deck. The tech giant set to report Q4 results after the bell. We're going to bring you the numbers and analysis. All that much more when Yahoo Finance returns.
2023 rocked the markets.
NVIDIA, the stock has been on a tear this
Silicon Valley
week.
Bank's collapse is the second largest bank failure in the U.S.
Inflation,
Mortgage rates.
the diabetes drug, Ozempic.
Now it's time to make bold decisions. Yahoo Finance Invest, the marquee event for investors seeking big ideas and bold decisions. Guided by the newsroom you trust. Don't miss it November 7th, exclusively on Yahoo Finance.
Good morning. This is Yahoo Finance.
Big news. 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings.
And they give you information if you watch them closely.
President Bostic, President Investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You gotta scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
Pagaya reporting record network volume in the third quarter, driven by the ramp up in new partnerships. The financial tech company also lifted its full year 2023 guidance, citing strong momentum in its business year to date. Joining us now is Pagaya's co-founder and CEO, Gal Krubiner. Gal, it's good to talk to you today. You're seeing a big pop in your stock, up more than 10% on the back of these results. Record network volume, record revenue. Tell me about what this says, you think, about the state of businesses.
So thank you very much for having me. I think as a step back first, let's talk about the mission of Pagaya. In Pagaya, what we're trying to do is help Americans get the consumer that they need. Most of us are less familiar with that, but at the end of the day, still in the economy today, in the infrastructure that we have, 42% of consumers are getting denied to credit. Pagaya is here to help it. What we do is we're getting with an AI machine learning capabilities, connecting that into banks, and by that, allowing and helping them to approve something like 10 to 20% more consumers. The real news that we have gone up to date is the fact that we have landed a top 5 bank and a top 4 OEM, and you can imagine just the amount of impact we will be able to have.
And Gal, let me ask you just, I'm interested. I'm sorry, go ahead, Gal.
No, I was just finishing up, please.
Gal, I'm interested just in the competitive landscape you're in. How is Pagaya different than other marketplace lenders like a lending club or an upstart?
So if you think about Pagaya, it's actually a very different business model. We do not have a website. We are not a B2C lender. We do not have any direct engagement with the client. We're actually going in a different approach, which is the B2B2C approach. We are working with banks. We are working with different lenders, such as SoFi, LA Bank, Klarna, that are actually trying to approve more consumers. And on the back end of that, we are deploying our capabilities, our technology, to help them approve these lenders. And with that said, on the other side, we have investors that are buying these loans and are financing the next level of funding for these consumers. So we are a platform, an AI platform that is allowing the names that you have just mentioned to be able to approve many more consumers into their ecosystem without having any more incremental risk on their balance sheet.
Gal, we have certainly seen a tougher lending environment with credit conditions tightening, especially for some of these businesses. What are you hearing from clients, and how does that provide some big opportunities for Pagaya?
You're touching exactly the important point. That market environment are the opportunity for us. When we are thinking about banks are pulling back today. The liquidity is an issue for them. The regulatory is becoming a bigger and bigger issue for them. And they are looking for ways to serve the consumers. This is our biggest tailwind. This is the reason why more banks are actually registered and connecting to our network. That's what we are hearing from our clients. They are struggling to be able to meet their client demand, although they really want to do so with the amount of liquidity that happened since the SVB fallout and the increasingly high regulation on the mid-sized banks. There is a gap. There is a big gap that needs to be filled. And Pagaya is exactly playing into this play. and allowing them and enabling them to be able to do that.
And Gal, you started off underwriting personal loans, and you've since moved into auto loans. It's a bigger market. What should investors expect in terms of the mix going forward for your company?
So really the place where we started was personal loan. And in only 7 years since the company has actually existed, we have managed to penetrate and to master very different markets. So we started from the personal loan market, and we enlarged our product set into the auto loan. And the recent launch was on the POS with a partnership with Klarna in the US. As we think about the future and going forward, I think the real opportunity of growth is coming from the POS or the BNPL, which are a major driver of change in the credit industry. And a lot of opportunities are coming up from the auto space, where mid-sized banks, as we spoke about, are actually pulling back and becoming much more scrutiny from that perspective. The personal loan is still one of our biggest market shares, and we are actually the biggest ABS personal loan issuer in the US. So if you think about it in this way, we have scale already in PL, we are growing and lending more customers in the auto loan, and we see the biggest opportunity in the BNPL and the POS spaces moving forward in the next few years.
Gal, I do want to ask you, because you are a Tel Aviv-based company, given what has been playing out, this war between Israel and Hamas over the last several weeks, what kind of disruptions has that meant for you personally, and how are you thinking about this business when you consider the disruptions moving forward?
So from a business perspective, Pagaya is really an American company. All of our revenues and all the capital is coming from the US and being served in the US. So from a business perspective, we don't have any outcome. As you can imagine, these are very tough days for an Israeli and for Israelis. So the first days were not easy, and we are struggling with trying to fight real terrorist acts. On Pagaya front, operations are working as usual. We have the ability to work in the office, to do what we need. All of our data centers and all the real needs are in the US. So for us, it's business as usual. It's just that the mentality and understanding of what really happened there is what is really, really tough for us.
And Gal, I'm interested, do you have the ability to tell us how many, what percentage of your employees of the total are in Israel, and how many of those have been called up as reservists?
Yes, our employees are split roughly evenly between the US and Israel. So think about it as 350 employees in the US and another 400 in Israel. And out of the 400 employees, we have something below 10% in reserve. So while it's not a very significant number, obviously we are hoping for everyone, and they are praying for their best and to come home as soon as possible.
Yeah, certainly our hope as well. Gal Krubiner, co-founder and CEO of Pagaya. It's good to talk to you today. I appreciate the time.
Thank you very much for having me.
Coming up, consumer strength. We are seeing some big spending power from the American consumer, but can this continue? We'll discuss on the other side. We'll be right back.
Goldman Sachs analysts and top executives from across the technology, media, and telecoms landscape are gathered in San Francisco for its annual Communicopia and Technology Conference.
Nextdoor is doing some pretty cool things on the AI front with our assistant and also with Vitality. For us, it actually starts to unleash unique data. We are the local knowledge graph, so I think the value of what we do starts to really shine forth. We're the only platform where you're finding out what's going on around you locally in real time. So with that data, we can do things like on the platform, help a neighbor compose a post in a way that is more engaging. So the assistant or the AI actually does that for you.
There's lots of interesting discussion we can have around AI. So we announced just this morning Zoom AI Companion, which is our answer to how generative AI is going to be included in our platform. And there's all kinds of really cool features that come with that for our paid subscribers. There are things like Chat Compose, if you're in a chat thread and you want to be able to respond to that. There are things like meeting summaries, which after the fact help categorize and capture not only what happened in the meeting, but also the true sentiment.
I think any creative would admit that AI is transformative to how they think about and how they concept new ideas. So I think it's going to be very exciting. It's still early innings, and we got to figure out how to do it right.
There's a lot of hype in our industry. I think this may be underhyped. I think it impacts things at so many levels. It impacts how we interact with computers and how they seem personal. It generates how art and media is created. It's really a breakthrough in computer science, and it impacts not only the products, but it impacts how software is created.
There certainly needs to be a lot of debate about AI and journalism. 57% of newsroom jobs in the United States have been lost. We're facing another wave, in this case a tsunami potentially of job losses, because of the impact of AI. And these are not just jobs lost, but it's insight lost. It's important that all media companies understand the impact, but also it's incumbent on the big AI players to understand their impact.
We launched Intuit Assist. And Intuit Assist is really a personalized, intelligent assistant in your pocket. It's also powered by AI-driven human experts so that when you are getting assistance from Intuit Assist, if you ever need to talk to an expert, no matter what it is that you're doing, you're able to do that. So there's always a gateway to help.
AI is going to change this whole industry completely. And so we're thinking a lot about how do we use AI to match people a lot better and to support the conversations that are happening. I think conversational AI is also a big opportunity because people do produce all these messages. So helping them craft those messages, make it easier to communicate, I think is something people will really appreciate as well.
One main takeaway from today's earnings indicates the consumer is still willing to spend. Starbucks says customers are willing to pay up on premium products with same-store sales up 8%. And Marriott seeing products bounce as customers spend on more expensive rooms and group bookings. Here's what I'm seeing, Akiko. When I look through earnings, it kind of depends on the company, right? You'll hear different things. I mean, Shopify, we were talking about them earlier. They reported the stock as a rocket ship today. Now, Evercore's Mark Mahaney, well-known guy, right? When he read through that report, one big takeaway to him was consumer resilience, right? That was an absolute takeaway from Shopify. Point out management commentary suggested no signs of consumer spend softness. You know, the 22% year-over-year GMV growth in Q3 also supports the idea, in his words, of consumer resilience. So that was Shopify. But then here was the Amazon CFO on their call talking about, from a customer behavior standpoint, we still see customers remaining cautious about price, trading down where they can, and seeking out deals coupled with lower spending on discretionary items. So it seems kind of still like a mix as you go through reports.
Yeah, you know, I think a lot of us have been trying to square these two stories. One, on the one hand, consumer sentiment, where they've said that they've become a little more cautious, and you look at the spending, the resilience has still been there. A lot been made about the savings, you know, that was saved up during the pandemic, you know, where consumers have been storing their money. But the question, I think, is how much runway that resilience has. We heard from Brian Cornell today in an interview with CNBC talking specifically about the consumer spending less, pulling back. And he said it's not just about discretionary spending. He's seeing a pullback in groceries as well. And yet, here we heard from Starbucks today saying premium drinks, consumers are still spending. They're still spending on food. So, you know, maybe it is about the prioritization. But at the same time, you have to wonder, going into the holiday season, how much more they are willing to spend. Are we sort of starting to reach the end of this? and are consumers going to start pulling back? Because we have seen it, at least on the discretionary side.
And also consumer, we talk about the consumer as if it's, the consumer.
Yes.
Of course, there's different kinds of consumers, right? I mean, a lower income consumer is going to have a much tougher time shouldering some of the headwinds we talk about, rising energy prices, higher borrowing costs, resumption of student loan payments than, let's say, a more well-heeled neighbor.
Yeah, and even the higher end consumers, you could argue what we've heard from companies like Walmart. They have said that trade downs have been happening. They've seen more of the higher end consumer coming in. So certainly something to continue watching as well. But we've talked about earnings, what that says about the consumer. The question is, what about the economic data? The latest GDP reading showing that spending continues to surge despite the higher rates. The economy expanding by 4.9% over the summer. But a pullback may be on the way going into the holiday season, at least according to JP Morgan's chairman and CEO, Jamie Dimon. Take a listen to what he told Yahoo Finance yesterday.
If this was the average checking account and make believe it's all one consumer, all that money, at one point they had multiples of what they had pre-COVID. That money is being spent down. If you look at that, what I just said, but you look at the lower, there are different ways of looking at it. It's hard to tell, and some inflation adjusts and some don't. But it looks like the lower, call it the third, is back to where it was pre-COVID. They don't have excess savings anymore. And that the middle class is getting close to zero, no excess savings, but they still have jobs and wages are going up. And then obviously wealthy people still have excess and stuff like that. We've seen that number coming down. And, as a matter of fact, I saw 3 forecasts the other day. One said, all from JP Morgan. One said it's going to come down by the end of by the first quarter next year. One was third quarter next year. One was the end of next year. Because, like I said, there are a lot of different ways to measure it.
Let's bring in Veronica Clark, Citi economist. Veronica, good to talk to you today. You heard Jamie Dimon there talk about sort of that savings getting chipped away from the consumer broadly. Is that what you're starting to see?
Yeah. I mean, we certainly look at those excess savings measures. What I wish we had data on was the liquid savings in people's bank accounts, because some of these excess savings measures, it's really just looking at the difference between income and consumption. And we absolutely have seen consumption stay strong, but it's also not going to capture anything that's gone to a down payment for a home, anything that's been used to pay down debts. So it's probably not that savings is really liquid and going to support consumption much longer. It does tell you that the consumer is in a much healthier place, though, relative to pre-pandemic.
And Veronica, I don't know if you heard, I was just talking to Akiko. When we talk about the consumer, of course, there's different consumers, right? The lower income, middle income, the affluent. As you look at those different kinds of consumers, how are they holding up? What are the differences between those three? I don't know if you heard Jamie Dimon there. He's seeing some real differences in terms of their savings.
Right. We also don't have great disaggregate data on some of the aggregate income and spending data that we have. But it does seem like maybe more of that excess savings, if there's any still left, it is probably more concentrated in higher income individuals. Maybe lower income have used up some of that excess savings. But I think everyone we saw even low wage sectors. Those were where we saw the really strong initial job growth initially coming out of the pandemic. So the median consumer, I think, is still pretty healthy.
Let me ask you, Veronica, there's been some research that I've seen too showing that really it's kind of the affluent now really carrying the baton forward. As you noted, it's kind of getting more concentrated higher up on the socioeconomic ladder. Is that a risk for the U.S. economy if we're kind of putting all our eggs in one basket there?
Yeah, I mean, I wouldn't say that it's just, affluent people supporting the economy, I don't think. I mean, we do have, aggregate consumption, aggregate incomes that are still rising. And that does mean I think the median, consumer is still pretty healthy. And I do wonder, we did see, some layoffs earlier this year, some loosening of labor markets like in tech or finance, those relatively higher paid sectors, maybe having more of the excess savings in those higher paid sectors. Those people were able to support, consumption for longer as they were maybe losing jobs. So it does, probably help support things overall. But I think the average person is still pretty well off.
Veronica, the resilience of the consumer, something that Fed Chair Jay Powell's been asked about before. At what point do we start to see that monetary policy trickle down? There's an argument to be made that, look, if you're looking at housing, something like that consumers broadly, at least those homeowners, are locked in on those lower rates, which is why we haven't necessarily seen sort of that direct impact. At what point do we start to see it? What does that lag factor look like as you view it?
Yeah, definitely. I mean, we did see, housing activity fall in 2022. It's people are not going to go buy a new home, if mortgage rates are rising. But yeah, for most people, if you've locked in a low rate, 3 or 4%, yeah, you're feeling pretty good. Most people are not going to be sensitive to changes in rates. Businesses will still be eventually. Businesses will face higher borrowing costs. Over a long period of time, people will have to sell their homes and face higher mortgage rates. But until something really loosens, breaks the labor market, yeah, the consumer is probably okay. We would be worried, though, at some point higher rates are going to weigh on investment, weigh on business activity, and that could mean layoffs, and that's down the road.
And Veronica, you mentioned the labor market. I just want to dig into that with you. Obviously, we got the big jobs report on Friday. It's been sturdy, the labor market, right, Veronica? We've got sub 4% unemployment. Wages are rising. I'm interested to get your take. What do you expect on Friday, but also just looking in the quarters ahead? Do you think the labor market stays sturdy? Does it start cooling? What do you think?
Yeah, it's been remarkably resilient. And that is really what is supporting activity now. That's what's supporting strong consumption. Until you see the labor market changing, I expect, you're going to still run pretty solid GDP growth. We're expecting 160,000 tomorrow. This October number, it's going to be a bit hard to dissect. We will probably have impacts from the auto strike in this number. That'll probably weigh on employment by maybe around 30K or so. So we'll be looking in some of the details are more important this month. But without that strike impact, it's still a really healthy pace of job growth. It probably doesn't last. You probably do see some slowing at some point. And we're watching data like, initial jobless claims, for maybe a leading indicator of that happening. And maybe that, can happen, as we're getting into next year, but near term, we're not seeing the signs of that.
Okay, we'll be watching for that number. Veronica Clark with Citi. Thanks so much for joining us today. Appreciate the time.
Thanks.
Well, coming up on the other side, Sam Bankman-Fried on trial. The judge keeping the jury late tonight for deliberations. We're going to break down what's next for SBF. That's coming up after the break.
Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
Now, I got a question. What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings.
And they give you information if you watch them closely.
President Bostic, President Investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You got to scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
The case against Sam Bankman-Fried now in the jury's hands. Deliberations just getting underway, which will cap the month-long trial. Joining us now is Zeke Fox, Bloomberg investigative reporter and author of Number Go Up, who has been in the courtroom throughout the trial. So, Zeke, your perspective here is really valuable because you interviewed Sam Bankman-Fried. You've been watching this drama closely. I'm just interested to start, Zeke, just your thoughts about this trial. What have you learned? What are your big takeaways?
So going into the trial, I thought that things looked really bad for Sam. Like, it seemed pretty obvious that a big fraud had been committed and that he was responsible for it. But amazingly, like, it's just gotten worse every day. Essentially, the prosecution brought in as witnesses each of his top lieutenants. And when they got into the details, the jury maybe got a little sleepy. I saw some people nodding off. But basically what each of them said was, hey, we did a big fraud. I'm really sorry, and I did it with that guy with the curly hair over there. So Sam finally had to take the stand in his own defense to try to counter some of this, but he didn't really have too much to say. When the prosecution cross-examined him, he just kept turning to, I don't recall. He really didn't present an alternative story that the jury could latch onto.
Yeah, at one point, I should say, the prosecution brought up your book, right? Sort of handed it to Sam Bankman-Fried and said, look, what you are saying, it does not necessarily jive with what you have said in the past. I mean, how incriminating was that testimony? Because there was a lot of debate about whether, in fact, he should take the stand leading up to that.
Yeah, I mean, I think the prosecution was basically going for almost bonus points here, where they're trying to argue that even if you only listen to the words of Sam Bankman-Fried, that itself is enough to convict. And so they brought up this interview I did with him back in November 2022, just after FTX collapsed, but before the cops showed up. I went down to the Bahamas. I interviewed him for a whole day at his $30 million penthouse. And I asked him, hey, was there anything funny going on between your hedge fund Alameda and your exchange FTX? And he admitted to me that Alameda didn't have to follow the same rules as everybody else on the exchange. He said there was more leeway. And like, that's a big thing to admit right there. That could be a fraud right there. And so the prosecutor asked him about that. And then when he said he didn't remember saying anything like that, she pulled out a literal copy of Number Go Up and walked it over to the witness stand and handed it to him and had him read parts of it to try to refresh his memory. But he claimed he didn't remember saying those things.
That's amazing, Zeke. Incredible detail there. I'm also interested, just what was it like, Zeke? And I know this is hard to get your head around, but what was the mood like in the courtroom when he took the stand? How did you see or hear people, how they were responding and reacting to him?
I definitely saw people perk up and start paying attention when he was being cross-examined. It was one of the most dramatic parts of the trial. But it's hard to read this jury. They range from 30 to maybe 60 years old, and they've got a whole range of jobs. Some of them have actually worked in the financial industry. Others have, or in the medical field. it's hard to know what they're going to make of this crypto world. And I think, Sam's only hope is that they might be so baffled by this that they're not willing to convict. The prosecution has tried to boil it down and say, listen, forget about crypto. This is a scam. These people stole money. He was the mastermind. And they presented a lot of evidence suggesting that.
Zeke, I'm thinking back to a year ago when we saw the fall of FTX. Certainly the commentary around that was that with FTX goes crypto, that there was a lot of calls for sort of the doom and gloom. Sure, I'm looking at Bitcoin prices right now. It's roughly at 35,000. It's not at the highs that we saw in 2021, but I'm curious if you've been surprised by how the shakedown has actually happened a year later.
Yeah, I certainly have been. I've long since given up on trying to predict Bitcoin prices. The people who like Bitcoin just love it so much that nothing, I think, seemingly will ever change their minds. But just in the last few weeks, some of the other coins like Solana have started pumping again. And I have to ask, who are these people who are buying into crypto now after seeing so many of the biggest companies in crypto revealed to be frauds? My expectation is that people are going to be a lot more skeptical the next time some young curly-haired genius comes along and says, have I got a great new app for you? I still find it hard to believe we're going to ever see another bubble like this one that we just lived through.
But, it's interesting, though, Zeke, because you look at Bitcoin, it has seen this rebound. listen, your point is taken. We are way, way off that $69,000 record there. But it has rebounded, in part, Zeke, I think, because, at least among crypto fans, there's just all this excitement about whether, in fact, we'll get, this spot Bitcoin ETF approved. One, I'm just curious whether you think it'll get approved. And second, do you feel like all the excitement about that product is warranted?
So this is just my opinion, but I think it will get approved. I don't really see how you can deny people the opportunity to trade Bitcoin when you've already given them. There's so many ways to buy Bitcoin now. You could go on, Coinbase or Robinhood. So it hardly seems like such a big deal for the regulators if there's one more way that people could buy Bitcoin. And flip side is, I think this won't have as big an impact as maybe the boosters do, because I think at this point, if you really want Bitcoin, you got a lot of options. You can go buy Bitcoin on all sorts of different apps. So I'm not sure this is going to unlock a huge amount of demand.
Zeke Fox, appreciate you joining in today. Love to have you back on when that verdict comes down. It'll be interesting to be following there. Thanks so much for joining us today. Well, Senator Cynthia Lummis says the Securities and Exchange Commission is overreaching on crypto, and now she's taking action. Yahoo Finance's Jen Schomburger is here with more. Jen.
Good afternoon. In an exclusive interview, Senator Cynthia Lummis told me she is moving forward to block the Government Accountability Office's determination that SEC guidance for how exchanges should treat customers' crypto should be a new rule. Lummis told me she believes it could actually hurt consumers and is an overreach by the SEC. In fact, she believes the SEC is overreaching in many other areas when it comes to crypto. Take a listen.
Companies' efforts to try to comply with whatever the SEC's recommending, where they're working in a bit of a regulatory vacuum, is just being met with enforcement actions that involve penalties and expensive and arduous procedures. So I think the SEC is overreaching it.
Lummis told me she believes she can garner support in the full Senate as well as the House to move forward in the next couple of weeks to block this rule. Now, I also asked Lummis about whether a portion of her very own crypto bill, which deals with preventing terrorists from using crypto, could have helped curtail Hamas's efforts in using crypto to finance its attack on Israel.
Yes, it would help. Would it have prevented these offshore companies like Binance from turning a blind eye to Hamas accounts? That I don't know, but it certainly would have helped. And to the extent that companies are operating out of the United States, it definitely would have helped.
Now, separately, Lummis also told me she's working with House Financial Services Committee Chair Patrick McHenry on ironing out potential differences on regulating stablecoins. The House put forth a version this summer, and Lummis has her own version. She thinks now that there's a new Speaker of the House in place, they could get something before the end of this calendar year. She's also hopeful she could get a vote on her own crypto legislation early next year. Guys?
Okay, Jen Schomburger bringing us that interview to us with Senator Lummis. Thanks so much. Well, coming up, we've got the closing bell on Wall Street. We're going to check in on the latest market moves and the top trending tickers. Stay tuned. We'll be right back. And there you have it, the closing bell for this Thursday on Wall Street. A live look here at the New York Stock Exchange. As we round out a rally on Wall Street, let's take a look at where all three major indices ended today. The Dow up more than 500 points, ending the day up 1.7%. The S&P 500 seeing its best day since May, up nearly 2% there. And the tech-heavy Nasdaq up 1.7% roughly. Taking a look at the sectors where we saw strong performance today, pretty much across the board. Taking a look at where things are. Also, a lot of this driven by economic data that we got out this morning. We had the weekly jobless claims coming in, ticked higher to 217,000. pointing to the relative resilience in the jobs market. We also got data from the Labor Department pointing to an unexpected drop in labor costs in the third quarter. All of this investors digesting is good news in terms of keeping inflation in check. And the big driver today really was the Treasury yields. Let's take a look at where those ended today, because we did see a big pullback. Remember, we have seen a big run up in the yields, especially in the 10-year yield. Taking a look at where that ended the day today, though, we did see a pullback in that, with the 10-year yield at 4.67%, down about 12 basis points, the 5-year yield at 4.6, and the 30-year at 4.8, so all coming in below that 5% level. Well, let's get a check on some trending tickers. I'm joined by Yahoo Finance's Josh Schaefer. Josh, kicking things off with Moderna.
Yeah, Kiko, Moderna shares falling today, falling about 7%, and you can see a lot of that was from a $3.6 billion write-down on excess COVID shots. $500 million of that comes from manufacturing, a write-down that Moderna had there. And really, management sort of explained this on the call, saying the world has changed from a pandemic to an endemic. So Moderna trying to scale back some of that COVID-19 vaccine shot production and sort of get used to what the new normal is going to be for demand of COVID-19 vaccines. I mean, if you look at Moderna's revenue just year over year for this quarter, Akiko, you can see how far it's really come down. They had $1.8 billion in revenue this quarter. You go back a year ago in the same quarter, $3.3 billion. You go back 2 years ago, it was nearly $5 billion in the quarter. So really just demand for that COVID-19 vaccine shot coming down, and that seems to be what's impacting the company the most right now.
Yeah, Josh, this is a company that has really struggled to kind of tell its story to investors beyond COVID-19. When you think about the mRNA technology and the vaccine really coming to fruition during the pandemic, since then the company has really tried to convince investors that, yes, they have a very strong pipeline. The CFO, Jamie Mock, coming through with Yahoo Finance, saying that he expects the company to break even by 2026. He has sort of addressed those investor concerns, but the company's continued to point to its pipeline that it has, specifically vaccines along the RSV as well as the flu coming in the year, saying that could be a big revenue driver as well. So still the market a little skeptical about what that next revenue driver is going to be for this company.
Yeah, Kiko, I think it's just a matter of right sizing and investors sort of figuring out what the overall market will eventually be for Moderna and where that top line is going to come from. And I want to take a look at another company that has a bit of a right sizing story going on. If we can take a look at Beyond Meat shares, those closing higher today after the company cut its revenue forecast for the second time in 3 months. But key here, the plant-based producer says it will cut costs in around 19% of its workforce. You can see Beyond Meat shares soaring on that news, up nearly 20%. And Akiko, we've talked about Beyond Meat for months now, years now, really thinking about what the overall market is for this company and sort of where they're going to be able to meet consumers, right? And I think that's a big part of the Beyond Meat story here as they try and cut costs is they haven't had a lot of revenue growth and new people coming into the market as they've offered some of these new products. And I'm still just wondering overall, Akiko, how many people want plant-based meat? Is the market as big as we thought it was, say, 2 or 3 years ago? It's starting to feel like it just isn't that big.
Yeah, and I feel like that's kind of been the question for years, right? Even when this company was riding momentum, where there was a lot more interest on plant-based meat, the question was how long things can be sustained. And in many ways, sort of the waning demand that we're seeing, that's the storyline we're starting to see play out here. I thought it was kind of interesting, talking about pricing. We saw Piper Sandler analyst Michael Lavery talking specifically about consumers trading down, not necessarily to other sort of veggie options, but to traditional animal meat. I mean, Beyond Meat for years has argued that it's not just about non-meat eaters, but meat eaters who are seeking out alternatives, a healthier lifestyle. So interesting to see that trade down, but we'll be watching closely to see whether they can get that demand back up. Let's take a look at another stock we're watching today, and that is Lucid, in the green as they announce a new referral program in the U.S. It will offer exclusive benefits to current Lucid Air owners who can share a referral link with friends and family to give them new vehicle purchase discounts. But Josh, can we talk about those discounts here? $750 off of Air Pure, $1,000 on Air Touring, and then $1,250 on the Air Grand Touring. I mean, this is a car that we're talking about that is upwards, beyond $70,000. How significant do you think that discount is, really?
I mean, it's not significant from a pure percentage standpoint, right? And you think that it probably wouldn't help when someone's buying a $75,000 car. Of course, $750 off sounds great, and I'm going to take it if you send me that link. But I don't think it brings in new customers necessarily, right? I think it's just trying to create a little bit of a community. So I'll give Lucid some credit for that. I mean, the stock, seeing it up 12%, I think to make more sense of that, you'd have to just take a look at Lucid shares on the year. Lucid stock has been hammered throughout the year, so it's not necessarily shocking to see a big move in what's become a smaller stock. But this is something Tesla's done, right? We've seen Tesla come out with a reward style program. They're giving people access to the Cybertruck launch, which I think is actually pretty cool. And you can see how Tesla fans would get excited to that. That to me sounds like a better rewards offering than maybe even $750, right? It's hard to put a price on seeing the Cybertruck launch in person for the first time, I'd imagine, for some people.
Yeah, I think you're right about that. I mean, Lucid with the discounts, but also a promise of a tour of the headquarters. I don't know, if you're paying for a car that's more than $75,000, wouldn't convince me personally, but the stock getting a boost on the back of that today. Josh Schaefer, thanks so much for that roundup there. Well, Janet Yellen saying the U.S. needs to focus on other countries for trade in the Indo-Pacific rather than putting all the focus on China. Speaking at the Asia Society, the Treasury Secretary set the stage for U.S.-China talks later this month between President Biden and his Chinese counterpart, Xi Jinping.
At home, greater supply chain resilience provides stability for consumers and helps ensure that our country's economic security is not unduly reliant on just one country for many critical inputs. We're starting to see the impacts in the data. Across sectors, from auto parts to electronics, the U.S. is importing more from key partners like India and Vietnam, as well as from Mexico, and is less dependent on one single country, in this case, China.
Well, all of this comes as the two countries will carry out rare nuclear arm talks ahead of their meeting amid rising tensions between the two countries. Joining us now is Leland Miller, China Beige Book co-founder, CEO. Leland, if in fact this meeting does happen between Chinese President Xi and President Biden, we're talking 2 weeks out in San Francisco. So the Chinese president traveling to the U.S. potentially, how significant would the stakes be in that?
Well, not terribly significant. There's something to be said for having talks to the U.S. and China because to some extent it puts a floor on the relationship. It prevents a greater collapse. But I think the overall directionality of this relationship is quite troubling. And so I think that more communication, that's great, but I don't think there's anything that this meeting will particularly accomplish other than just keeping the lines of communication. So that's a check mark, great, but nothing beyond that.
I mean, with that said, the Chinese president is traveling to the U.S., something we haven't seen in some time. The Chinese economy, there's still growth, but it is slowing growth. How much leverage do you think the White House believes it has in this case?
I don't think they have all that much leverage. If they did, they would be a lot tougher on export controls and other areas of the relationship. I think that what they're worried about right now is misinterpreting China or setting provocative signals to Xi Jinping and creating another mess in a global universe that is becoming troubling in Europe and in the Middle East and elsewhere. So what I think they're trying to do is crisis management right now. I don't think they're trying to accomplish anything in the U.S.-China relationship specifically.
With that said, let's talk specifically about what's been playing out in the Chinese economy. We were just showing sort of what we have seen stall out in terms of growth in China. There's a number of issues, obviously, within the property sector as well, but high jobless numbers among younger workers, too. I mean, where do you see the policy moving from here, given all the factors at play and the challenges President Xi faces?
Well, I think we're in the middle of a new norm. Markets are always bipolar on China. They either think great things are about to happen or they think that China's on the verge of collapse. Rarely are either of those true. So if you look at earlier in this year, investors were extremely bullish. They thought that coming out of the lockdowns from last year with COVID-0, that there was going to be explosive recovery and there was going to be explosive stock market rally. Neither of those happened. They were not realistic. But when those expectations were frustrated into the spring and into the summer, markets swung full circle the other way, and they decided that China was on the verge of collapse. That's also not true. You have what is essentially just a very poor recovery right now. You've got sequential growth most months in 2023. Everything except property is better than 2022. It's just not that great overall in terms of economy, and it should be much better. So it's really in the middle. Not a lot of good news, but also nothing catastrophic.
So what does that new norm look like? Are we talking about 5% growth roughly? And is that sort of something that we have seen Xi Jinping accept, that we're not talking about the 8% levels we saw several years ago? 5% is manageable growth, not stimulus at all costs.
Yeah, well, Beijing will hit 5% this year because the base of comparison is from a year that was a total disaster. But 5% going forward is a total pipe dream. I think we're going to be talking about levels that are much closer to 2% in the future, not necessarily in the next 2 years. But this is an economy that's going to be growing much, much more slowly. And I think the mistake that investors have been making for several years now is they've gotten very bearish cyclically. They were too bearish over the summer, but they're not bearish enough structurally. So they should be more bullish cyclically, but they should be more bearish structurally. China's going to be slowing down 5%, 4%, 3%. We're going to be seeing much, much slower growth than that going forward.
What does that mean ultimately for U.S. businesses, multinational businesses that have set up operations in China for many, many years? The potential growth there has been the big lure to China. Does that money continue to flow through, even in a 5%, 4% economy?
Yeah, some of it will, but what it really means is you have to know your market. This idea 20 years ago, 10 years ago, even 5 years ago, that you just put your operations in China and because there were 1.4 billion Chinese, they'll buy a lot of stuff. That didn't work, and it's not going to work going forward. What you have to understand is the way the economy is working. What does the government look for in terms of favored sectors or disfavored sectors? Where are Chinese consumers going to be spending in the future? They're certainly going to want more babies. They certainly have a lot of old people to take care of. So there's a lot of opportunities that are still inside the Chinese marketplace. They're not necessarily the ones that people thought were going to be the big hitters a few years ago. And the idea of just going into China, investing there, and then you see a profit a few years later, that dream is gone.
China Beige Book's Leland Miller, always good to get your insights. Appreciate the time today.
Thank you.
Well, coming up, more Yahoo Finance on the other side of the break. We'll be right back.
Goldman Sachs analysts and top executives from across the technology, media, and telecoms landscape are gathered in San Francisco for its annual Communacopia and Technology Conference.
Nextdoor is doing some pretty cool things on the AI front with our assistant and also with Vitality. For us, it actually starts to unleash unique data. We are the local knowledge graph, so I think the value of what we do starts to really shine forth. We're the only platform where you're finding out what's going on around you locally in real time. So with that data, we can do things like on the platform, help a neighbor compose a post in a way that is more engaging. So the assistant or the AI actually does that for you.
There's lots of interesting discussion we can have around AI. So we announced just this morning Zoom AI Companion, which is our answer to how generative AI is going to be included in our platform. And there's all kinds of really cool features that come with that for our paid subscribers. There are things like Chat Compose, if you're in a chat thread and you want to be able to respond to that. There are things like meeting summaries, which after the fact help categorize and capture not only what happened in the meeting, but also the true sentiment.
I think any creative would admit that AI is transformative to how they think about and how they concept new ideas. So I think it's going to be very exciting. It's still early innings, and we got to figure out how to do it right.
There's a lot of hype in our industry. I think this may be underhyped. I think it impacts things at so many levels. It impacts how we interact with computers and how they seem personal. It generates how art and media is created. It's really a breakthrough in computer science, and it impacts not only the products, but it impacts how software is created.
There certainly needs to be a lot of debate about AI and journalism. 57% of newsroom jobs in the United States have been lost. We're facing another wave, in this case a tsunami potentially of job losses because of the impact of AI. And these are not just jobs lost, but it's insight lost. It's important that all media companies understand the impact, but it's incumbent on the big AI players to understand their impact.
We launched Intuit Assist. And Intuit Assist is really a personalized, intelligent assistant in your pocket. It's also powered by AI-driven human experts so that when you are getting assistance from Intuit Assist, if you ever need to talk to an expert, no matter what it is that you're doing, you're able to do that. So there's always a gateway to help.
AI is going to change this whole industry completely. And so we're thinking a lot about how do we use AI to match people a lot better and to support the conversations that are happening. I think conversational AI is also a big opportunity because people do produce all these messages. So helping them craft those messages, make it easier to communicate, I think is something people will really appreciate as well.
We are watching shares of Block soaring in after hours here, up more than 15% on the back of their latest results. Seeing a big beat both on the top and bottom lines. Taking a look at adjusted EPS coming in at 55 cents a share. That's well over the 42 cents that was expected, or 42 cents year on year. That was estimated adjusted EBITDA at $477.5 million, up 46% year on year. Taking a look broadly here, we're also this investor letter from Jack Dorsey, the company saying that it is buying back $1 billion in shares. Jack Dorsey saying specifically, this also allows us to act opportunistically when we believe our company is undervalued. The stock up more than 16% right now. Josh Schaefer here joining me to break down some of those numbers. Josh, we have seen some momentum coming through here for the company, especially around Square's banking products. Dorsey highlighting that, saying we've come a long way since introducing those like Square Capital. He says we see a growth opportunity for banking with and on Square, on our surfacing it as one of our top priorities.
Yeah, Kiko, I mean, it seems like a great print at a high level when you take a look at these Block earnings. Obviously, when you adjust your fiscal year adjusted EBITDA forecast, investors are usually going to like something like that. One thing that stands out to me in this report is the Bitcoin revenue coming in better than expected, coming in at about $2.4 billion. The street have been expecting $2.2 billion. And one thing I've just been curious about this earnings season, as we've seen the rise in Bitcoin prices over the last month or two, Bitcoin recently touching a 52-week high. Just thinking about some of these public companies that have exposure to Bitcoin, that obviously that worked to the downside over the past year as Bitcoin's been slumping. But how does it start impacting these companies once again, as it seems like Bitcoin has become a little bit more part of the conversation recently? And of course, Block, Coinbase, some of the public ways that people can sort of access Bitcoin, but also transact on Bitcoin, right? When we think about crypto and sort of with FTX gone, Binance in some trouble, and a lot of the ways that people were accessing crypto being gone, I think it's interesting to think about how some of these companies that still have access to crypto are able to sort of pull that lever. It feels like a small part of the report maybe, but something that's interesting to highlight and sort of think about moving forward in that growth story for Block.
Yeah, Josh, that's an interesting point. We were just having that conversation with Zeke Fox, who wrote the book on Sam Bankman-Fried, saying, look, it was a year ago when we were hearing about the fallout from FTX being the death knell for Bitcoin and crypto overall. And we have seen a healthy bounce back, certainly not at the levels, the highs that we saw back in 2021. But as we have seen, names like Coinbase as well as Block fall along with those declines, and Bitcoin now they're seeing that bit of a healthy bounce back, you could say, on the back of more potentially with crypto trading. And then, of course, there's a spot Bitcoin ETF that could be in the works as well.
Yeah, Kiko. And I think the other thing, too, that I'm just sort of thinking about as I look at Block shares up almost 20% right now is something we highlighted yesterday after the bell, just how different it can be when you report in earnings season, right? When you think about the different aspects of sort of the market action we've seen over the last month, to report after people start feeling more comfortable about the Fed's positioning amid a broader tech rally that we've had over the last 2 days, it's just more advantageous for some of these companies, and something that I feel like is top of mind when we think about Apple earnings coming out in just a few minutes now, too.
Yeah, we'll be breaking down those numbers as well. But another stock you're watching right now, Josh, DraftKings getting a big pop on the back of their results.
Yeah, Kiko, another stock we got up after hours here, nearly 9%. And I want to hit a couple of the high-level numbers first. So DraftKings lifting their overall full-year outlook for revenue to a range of $3.67 billion to $3.72 billion. The prior outlook was $3.4 billion to $3.5 billion, so a big boost there. Also giving adjusted EBITDA guidance for 2024 in a range of $350 to $450 million for a company that has long been trying to reach full-year profitability. You cannot stress enough how important that number is. Now, taking a look at the prior quarter that they just reported, revenue coming in at $790 million. The street had been hoping for $702 million, so a beat there. And then you see also a beat on EPS. So the company lost 35 cents per share on an adjusted basis. The street had been looking for an adjusted loss of 67 cents. And Akiko, really the story for DraftKings over the whole year as the shares have soared throughout 2023 has been them taking more market share. It's really become them and FanDuel at the top of this sports gambling scene right now. And I think it's continuing to show in DraftKings earnings. Analysts were boosting outlooks on sales coming into this report, and they're still beating those sales outlooks. So I think it's been hard to sort of figure out exactly how dominant DraftKings market share is at this point, but they've got about 35% of that sportsbook market, according to Bank of America. So starting to have almost two top players at the top and a little bit of everyone else, it seems like.
Yeah, sure, and certainly a positive development for investors in DraftKings. But Josh, I'm curious because when you think about sports betting, one of the questions that's kind of been overarching the space is what that next lever is going to be. You think back to last year when there were new markets that were opened up in a significant way. What are those new markets that we could be looking at when you think about where sports gambling has already been legalized state by state, and where these companies, a company like DraftKings that already has dominant market share, where they can get that additional revenue?
Yeah, no, it's a great question. And when you think about legalization for this year, one of the key things is, so football season just started, of course, and most of this report doesn't have football season accounted for yet, right? So football season, it will be interesting to see if DraftKings can hold in new markets like, say, Massachusetts. And then when you look forward to next football season and sort of that next round of regulation in 2024, remember, California didn't pass last year. California is one of the top 5 biggest states in the country. Texas, one of the top 5 biggest states by population in the country. And Florida, one of the top 5 biggest states by population in the country, all do not have legal sports gambling, mobile sports gambling that DraftKings has access to. So that's one of the big top line levers that this company thinks they can eventually pull if we do see legalization, and that could come as soon as 2024. Now, of course, Akiko, the other side of that is as they open and market in those states, we're going to be talking a lot about profitability again, right? Because it's expensive to advertise and market in a big new state.
Yeah, I know one of those questions you've posed to the company before. We'll be watching that one closely. We should point out DraftKings up well over 8% in after hours on the back of their results there. Josh, thanks so much for helping break that down. Coming up on the other side, we got Apple's Q4 results. We're going to break the numbers down for you and get you in-depth analysis. We'll be right back.
Apple just now reporting its Q4 earnings results. Let's get you those numbers right away. Apple reporting on the bottom line EPS of $1.46. That is a beat. The street was looking for $1.39. Revenue also beating expectations, $89.5 billion. Street was at $89.34 billion. Gross margins also better than expected, 45.2% versus 44.5%. Let's go back product segment here. iPhone revenue, $43.81 billion in the quarter. higher versus an estimate of $43.73 billion, so edging higher than the street was looking for there. Mac, though, comes in lighter, $7.6 billion. Street was closer to $8.76 billion. iPad, they come in at $6.4 billion. The street was at $6.12. Wearables, $9.3 billion in the quarter versus an expectation of $9.41. Services, though, $22.3 billion versus a forecast by the street of $21.36 billion. That, by the way, was an all-time high, Apple saying. I did have the chance to catch up with CFO Luca Maestri. Let me bring you some statements there. First of all, we talked about what demand has been like for the new iPhone 15 lineup so far. Luca Maestri telling Yahoo Finance in September, for those 9 days that the iPhone 15 was in the market, it sold better, he told us, than the iPhone 14 versus last year. And that's true for China as well. He said, we believe we gained market share in China during the September quarter. The initial signals are positive, he said. He added that the iPhone 15 Pro and Pro Max are currently supply constrained. On China, by the way, obviously a focus for investors. He said we were down 2% in Greater China, but up 3% in constant currency, Akiko.
Yeah, taking a look at the stock move right now, Josh. Apple down just slightly right now. Sure, as you pointed out, sort of better than expected. The street had turned a little bearish, you could argue, in terms of the expectations for the iPhone 15. And yet we are still talking about 4 straight quarters of sales declines. So the market noting that as well. Interesting to hear about what's been playing out in China. And I'm curious if you had that conversation when you spoke to Luca Maestri about what that expectation is. Yes, 2.5% decline when you compare it year on year. Now, how much of this is sort of the macro environment? How much of this is about potential competition they're seeing in the market?
Yeah, I think we're going to have to get a little bit. Remember, we don't have the forecast here or the guidance. And when I asked Luca Maestri about that, he said, listen, we're going to have to wait for the call for that. So maybe some of that color comes out in the call. But you're asking all the right questions. The focus will be on China, what they did this quarter, but also what they're seeing quarters ahead, including, of course, as you mentioned, the competition there. All right, let's move on to dig into the latest quarter from Apple. We're going to have Tom Forte from D.A. Davidson, Managing Director, Senior Research Analyst. Tom, the numbers are out. Interested to get your first look.
Sure. So on first blush, I think investors should be sighing, breathing a sigh of relief here to the extent that results were better than expected, pretty much across the board except for the Max. And so I would say that that's kind of a win on a relative basis, despite the fact that they had their 4th consecutive quarter of declining revenue.
Yeah, Tom, you've been pretty vocal in sort of the pulling back the expectation on the iPhone 15. Number one, there was the issue sort of pricing. Apple still priced at a higher price point. And then also questions about demand given that. I realize in this quarter, it doesn't give you the full picture of what that demand looks like because it was still early days. But given the numbers that we got today, does that change the way you view the outlook, particularly on the iPhone right now?
It doesn't change the outlook. I think that Apple's still in a position where it can't solely rely on the iPhone to drive shares higher. This is going to put more pressure on the Vision Pro launch at the start of calendar next year. The 2% decline in China, I think, is a concern. And China is about 20% of revenue for Apple. But I think that, again, investors should breathe a sigh of relief to the extent that sales and earnings were better than expected. And there's enough in there to, give some people hope.
Tom, on China specifically, what's the bigger concern for you? Is it about the consumer sentiment, what the macro environment is like, or is it about homegrown competition, particularly around Huawei?
So it's twofold. One, the weak Chinese economy, to the extent that that's a large portion of Apple's revenue. 2, to the extent they're still heavily dependent on China from a supply chain standpoint. And I guess 3, to the extent that you're seeing this, trade war, however you want to think about the tensions between the U.S. and China, and that seems to be escalating, and Apple's caught right in the middle. So multiple challenges for Apple in China right now.
Talk to me, Tom, too. Listen, we're waiting for the call in which we'll get a lot more insight and guidance, color and commentary from Tim Cook and Luca Maestri about the outlook there. I was interested about margins, though, Tom, hanging in there. They clocked in for the September quarter at 45.2%. The street was closer to 44.5%. I'm interested, what do you think the puts and takes are there? Where do you think gross margins could go from here?
So generally speaking, I think the fact that they had better than expected iPhone sales, that tends to be one of their higher margin hardware items. And then also to the extent that their services revenue exceeded expectations, that's very important for margin. So the question then is, what are the expectations for the higher margin categories, iPhones and services in the December quarter. So look forward to additional details on the call in that regard.
We should point out Apple shares now down about 1.2%, or just about 1% right now on the back of those results. Tom, if it's not about the iPhone 15, what are the additional levers, do you think, that could push this stock higher?
Yeah, so I definitely think that they're going to need either the Chinese economy to materially improve or relations between the U.S. and China to improve. Otherwise, I think it's going to be harder to the extent that they're going to need the Vision Pro to exceed expectations. I think with a $34.99 price point, they're not going to be able to achieve mass adoption. But essentially, they've fired all their bullets here, and the stock's still not exactly, humming. So they're going to need either something to improve in China or the Vision Pro to materially outperform against expectations, which I think will be difficult.
And Tom, when we just spoke to CFO Luca Maestri, and we were talking about the Mac specifically, and I did ask him, listen, the quarter Mac revenue came in here, Tom, around $7.6 billion. That did miss. The street was closer to around $8.8 billion. And I asked Maestri about that, and he said, in part, what we're dealing with here is just tough comps. They did just introduce, Tom, as you know, they had their event. They've got new product. Do you think that new product could provide a tailwind for the Mac business?
The answer is no. So I liked how they had it, scary fast, and it was the day before Halloween. The challenge for iPhone and Apple and others, especially as it pertains to laptops and consumer electronics in general, is you had a huge pull forward in the early stages of COVID. That's proven to be a problem even for Apple. Apple gets about 20% of their revenue from laptops and from tablets, and that 20% of revenue could continue to be under duress until consumers decide to spend again on consumer electronics. When that happens, it's not clear today.
And Tom, you're on a neutral right now on the stock. What would get you to move to a buy, Tom? What do you need to see?
So I'd either like to see a pretty significant pullback to make it more exciting. From a valuation standpoint, it's still an amazing company, has a tremendous balance sheet. Otherwise, I'd like to see the two things that I pointed out earlier, some sort of progress in China, either the economy is improving or relations between the two governments are improving. And then, the harder to imagine, better than expected performance for Vision Pro when they launch it next year. It's an important next step for Apple to be less dependent on the iPhone. Those are the things that would get me more excited about stock.
Finally, Tom, this current quarter is, at least historically, the biggest one for Apple. Given where the numbers are across the portfolio for the company, how do you think this sets things up going into the holiday season?
I think it's challenging for Apple and everyone to the extent that I think if you looked at, for example, the mega sale that Amazon had and the outlook Amazon had for the December quarter, they had clearly a pull forward in demand. You're seeing a very highly promotional environment. It's having a tremendous negative impact on Etsy, as an example. So I think even Apple's going to have some challenges when it comes to holiday spend in the December quarter.
Tom Forte, thank you so much for your time today, Tom. Appreciate it.
Thank you.
And coming up, we'll go around the horn with some of today's top stories that's coming up next.
We are live at the Chase for Business Make Your Move Summit, which is putting a spotlight on small businesses. And I have been speaking to small business owners and also business leaders throughout the day. And one of the common themes, one of the common concerns that I've been hearing from a number of business leaders is about the consumer, a weakening consumer, and what challenges that then poses to their businesses. So I want to bring in Bob Jordan. He's the CEO of Southwest. Bob, it's great to have you here. Thanks so much for making the time.
No, thank you. Thank you for having me. I appreciate it.
So let's talk about the consumer. Obviously, Southwest very reliant on consumer spending and consumer trends. What are you seeing? Are you seeing any cracks in the consumer?
You know, we're not. The leisure travel is really strong, and so it's a little different in trend than it was maybe a year ago. Yesterday was last year was gangbusters for sure. This year it's returned to normal, so the patterns are kind of the same as they were pre-pandemic. What's really off a little bit still is business. Business is very steady, but the business demand is still 10 to 15% unrecovered from pre-pandemic, and so that's the piece that's changed.
Do you think that's ever going to come back?
You know, it's hard to know. I'm an eternal optimist. I think it comes all the way back, in my opinion.
And what does that timeline look like?
Well, it's hard to say. I do think that last 10% is going to be stubborn. I mean, you think about it. A lot of this relates to, I think, when folks are in the office and what does remote work and work from home look like, those kinds of things. But I believe it comes all the way back. I mean, when you need to win a contract and you need to be there to win that contract, you're going to fly, you're going to travel. But I do think that last little bit might be stubborn. But the business is steady. It just hasn't recovered all the way back to pre-pandemic.
Yeah, that's something we've heard from a number of the other airlines as well. Bob, when you take a look at the holiday season specifically, what do booking trends look like? And are you expected maybe to surpass what some of your initial expectations were for this season?
Our holiday already looks really strong. So if you look at where we are booked today as compared to last year, we're actually booked ahead of this time in 2022, which is, I think, a real strong indicator. We had earnings last week, so you just think more broadly. We had record operating revenues as a company. We had record passengers as a company. We had record Rapid Rewards and new customers and new members as a company. We had record Rapid Rewards revenues. We had record ancillary revenues. I could go on and on if you can't tell. So that just tells me demand for the Southwest Airlines product is strong, and that strength is translating into the holiday bookings.
Bob, when we talk about the state of the consumer right now, we heard from Jamie Dimon, JP Morgan's CEO yesterday. He spoke with my colleague Brian Sozzi. He was talking about the fact that there is some reason to be a bit cautious. And he was talking specifically about the middle class, saying that the middle class is getting close to zero, no excess savings, talking about the savings that were built up during the pandemic. I'm curious if that is, in fact, the case. What does that then mean for a business like Southwest?
Well, again, if you go, and things can change, you go to the macro, and we aren't seeing a shift in booking trends, and we're not seeing the weakness. We're just not seeing it yet. I've been at Southwest a long time. I've been in commercial for a long time before this job, and so trends can change on you. What's good for Southwest Airlines is we are well positioned. So if that occurs, what do you want? You want to be the low-cost provider. You want to have low fares. And that's the center of the Southwest business model combined with great people. So I think we're well positioned if that does happen. But right now, we are not seeing weakness in demand.
But what does your discount strategy look like at this point?
There's also been a lot of focus on that. Are airlines, retailers, are they over discounting? And is that a sign of something that's going on in demand? We are discounting or running sales at roughly the same rate that we have historically, maybe a little bit more. But you've got to think about a sale this week. They're always capacity controlled. It's not every flight's on sale. So anytime we have a sale, we are targeting particular periods, particular days, particular parts of the month, particular flights. Where we have been targeting probably more than ever are what we call shoulder flights. So very early, very late flights. Those are typically the hardest to fill, period. And they continue to be the hardest to fill. And so a lot of our sales have really targeted those low demand flights early and late in the day.
Bob, you talked in your earnings call last week just about rising costs and some of that being associated with labor. And that brings me to the negotiations that are still ongoing with your pilots. When you talk about the threat of a strike, I guess, first off, where do those talks stand?
Well, if you just look at labor generally, we are one of the most dependent on labor organized airlines out there, where I think we're 86% organized. And that's fine. Our people are wonderful. We have 9 completed agreements in the last year. I think that's a record. So we're making tremendous progress with labor. We do have 3 left to go. We got an agreement with our flight attendants last Wednesday, which is wonderful. Now, it still has to be voted on, but we have an agreement, and I think that vote ends on December the 8th. So then it leaves 2 more, our pilots and our ramp employees. We had an agreement with our ramp employees, and it was voted down, and so we're already back at the table talking about a next agreement. So I'm optimistic there. So that leaves our pilots. And we are making, despite, there's a lot of noise, but we are at the table every single week. We're making progress with our pilots every single week. And I'm very hopeful that we will have the agreement done soon. You're never there till you're there, but I'm very hopeful that we'll have an agreement soon. Because it's important, number one, to reward our folks. I mean, inflation is real, and I want to reward our tremendous people. And then second, it's a distraction, to have these agreements open. And so I'm eager to get those last couple closed.
What are some of the sticking points still?
I don't want to negotiate in public. Contracts are very complex. Everybody always thinks about rates, but there are all kinds of rules and benefits. There's a lot in a contract, and I don't want to negotiate in public. It's not my job. But just know that we are going section by section by section with our pilots, and we're closing out sections, and there's progress. And I'm optimistic and eager to get it done.
But we have certainly seen more of a movement here from unions, more vocal about their demands. What has it been like just negotiating with the unions, trying to find that common ground and come to an agreement before your respective deadlines?
Well, it's definitely a time where there is a shortage of labor. Mm-hmm. So I do think to some extent that impacts the way these things are occurring. There's a process here. So the way you negotiate, the way sometimes some of those aspects become public, you've seen things like picketing with our pilots as an example. That has become part of the process. It's not unusual for that to happen. I'm hopeful in the future that as we negotiate contracts, I'm ready to get these done, but I'm hopeful as we negotiate next time and the next time that we can continue to work on that process so that it is some of those things don't occur. That's not always in my control. But again, my focus is very simple. It's to get the contracts done, get our people rewarded, and get the uncertainty off the table.
Bob, I want to pick up on one point that you just mentioned there, and that's the labor shortage. What does that currently look like for Southwest? We were talking a lot just about a year ago, or really over the last year, about the pilot shortage specifically. Where does that stand?
Well, you just look at hiring generally coming out of the pandemic. Every company had trouble with a number of things coming out of the pandemic, getting their staffing back, getting skilled staffing back, supply chain issues. And we had exactly the same thing. We have no trouble hiring people at Southwest Airlines. We've hired tens of thousands of people in the last 2 years, but you do have to work a little bit harder than usual, that's for sure. On the pilot front, we're getting pilots. I'm very pleased that we were the first airline to get fully staffed, number one, the first airline to get all of our aircraft up and flying and off the ground, which means having enough pilots, and then also the first airline to get our network fully restored to pre-pandemic levels.
Bob Jordan, thanks so much for taking the time to join us.
Thank you for having me.
CEO of Southwest. Thanks.
I appreciate it.
Keep it right here on Yahoo Finance. All your market action, market coverage is still ahead. We'll be right back.
We are looking at two entertainment stocks, After Hours, Paramount Global, and Live Nation. Ali Canal here with the details. Both of those stocks getting a pop in After Hours trade, Ali.
Yes, and I'm going to start with Paramount. That's the more significant of the two, more than 10% higher today on the heels of those earnings. Now, a lot of positives in this report, but the most notable is the forecast that 2023 streaming losses will be lower than 2022. This comes as the company reported a direct-to-consumer loss of $238 million. That was a narrower loss than analysts had expected and also lower compared to the year-ago period. Bob Bakish saying in the release that streaming investment peaked ahead of plans, with the DTC revenue aided by subscriber growth as well as price increases for Paramount Plus. We take a look at total Paramount Plus subscribers. They've now reached more than 63 million subs, with the streamer adding 2.7 million subs in the quarter ahead of estimates. We did see a slight miss on the revenue side, but still stronger compared to the year-ago period. One area of concern does remain the TV ad market, with linear ad revenue slumping 14% year over year. But switching gears to Live Nation, this stock up about 4% right now on the heels of blockbuster earnings. Live Nation, of course, is the parent company of Ticketmaster. They reported their strongest quarter ever, revealing they're on pace for a record 2023 thanks to those concerts we saw this summer from Taylor Swift and Beyonce. We've seen a lot of pent-up demand for live events coupled with higher ticket prices. That helped boost revenue in the quarter. We've heard from a lot of analysts that funflation is here to stay as more consumers want to spend their money on those in-person events. We will be receiving the call any minute now, and I'm curious to see what else they have to say when it comes to how sustainable these concerts are moving forward and how sustainable that demand is. But two companies reporting very solid results today.
All right. Thank you so much, Ali. Appreciate it. And time now for What to Watch on Friday. A new read on the labor market is on tap. Ahead on the open, the October jobs report is expected to show job growth of 180,000. This would be a sharp decline from the September jobs report. The unemployment rate is expected to hold steady at 3.8%. Economists expect average hourly earnings to rise 4% year over year. The Fed to keep a close eye on the latest data as the central bank retains the option to further rate hikes if needed. On the earnings front, we're going to get quarterly results from AMC Networks, Cinemark, and Restaurant Brands International. Investors will be keeping an eye out for a commentary on guidance from Cinemark and the ongoing actor strike. And for AMC, we could get an update on the success of the Taylor Swift concert movie. Meanwhile, Restaurant Brands, parent company of Burger King and Popeyes, to provide more color on consumer resilience. That'll do it for today's Yahoo Finance Live. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.